It's very kind of you. Ladies and gentlemen, for today's lunch, a light taste of Taiwan's securities lending market is also included. I'll be using the top-down view to introduce the global securities lending market for you. I will be beginning with the global perspective and then give you a area comparison for the Asian countries. And then I will be narrowed down to the Taiwan practice. And at the end of my presentation, I will give you a snapshot as a gift for you to participate today. First of all, the global perspective. As early as 1999, the IOSCO, for those of you who are not familiar with IOSCO, it is the International Organization of Securities Regulators. In 1999, in its paper, IOSCO pointed out that, which I quote, in today's capital market, securities seldom lie idle. They are easier to lend to those who need these securities, or they are used as a collateral. They are used as collateral to finance their position. So in the typical, so the former one, we call it securities-driven transaction. And the later one, we call it cash-driven transaction. In a typical SBL transaction, the beneficial owner, I think most of you are, they either lend directly to the borrower on a principal basis, or they lend indirectly through the agent lenders. And the major borrower, would be the prime broker in most of the markets. And behind them, there are the end users of these borrowed securities, majorly the hedge funds, the proprietary traders. There are different kinds of contracts that the counterparties need to sign, and between the agent lender and the broker-dealer, they need to sign a master SBL agreement. And on a daily basis, they will march to the market after the securities and collaterals change hands between the agent lender and the broker-dealers. And the dividends and corporate will be given to the agent lender and therefore to the beneficial owner when the corporate action occurred. And at the end of the trade, when the trade is unwind, the collateral and the underlying securities will change hands accordingly. And in aftermath of the 2008 global financial crisis, the Financial Stability Board, which is composed of G20 countries, prime ministers and central bankers, they further pointed out and divided the global securities lending market into 4 segments, i.e. securities lending segment, a leveraged investment fund financing and securities borrowing segments, and the third, an interdealer repo segment, and a repo financing segment. It will make it clear if we look at this figure. On the bottom, you can see 2 segments. Majorly, they are the securities-driven trades. First one being the securities lending segment. Beneficial owners like you lend their shares directly or indirectly through agent lenders. And then behind the prime brokers or dealers, there are leveraged investment funds. They borrow shares from the prime brokers or they acquire financing from the prime brokers. And the third part being the interdealer repo segments. Among the prime brokers, they will channel the securities among themselves. And from time to time, they will use the securities as a collateral to get the shorter term finance from the cash-rich institutions. So that's a cash-driven trades for SBL. That's a securities-driven trades for the SBL. And in Taiwan, I think I need to point out some difference between the global practice. The first one being that the agent lenders, although they do exist in Taiwan's market, but they do not have legal presence in our market. And the second is that the prime brokers constitute the majority of our SBL market. It can be as much as 90% of our total market. And the third one being the financing trade or cash-driven market. It constitutes about 20% of our total shares on loan. And secondly, I would like to give you a regional comparison. Although some of the statistics are a little bit obsolete, but I think it will still demonstrate the trend for our competitiveness in the region. As in 2013 and 2014, Taiwan ranked as the fourth in the region, behind Japan, Hong Kong, and Australia, as long as the on loan balance is concerned. And the pie chart shows the total on loan value of the all Pan-Asian market. Taiwan counts about 7% of the Asian SBL market. But from the revenue generated from different countries, we can see that the revenue generated from Taiwan is a bit higher than the market share of 7%. It means that Taiwan, comparing to our counterparties, it is quite lucrative. And that shows the change of supply in recent years. That is Taiwan, the lighter blue lines. And that's a change in demand. Also, Taiwan is very outstanding. And that is the total equity borrow cost. The majority of them is the lending fee. That is what you can generate from lending your shares. Again, Taiwan is very outstanding. And if we take a closer look at the statistics, I would like to highlight Taiwan and Korea. That's the figures for 2014. And Korea has a lending fee around 160 basis points, but it increased over last year to about 295 basis points, while Taiwan decreased a little bit to around 170 basis points. And these two countries, Taiwan and Korea, are still among the best profitable SBL market in Pan-Asian region. But one thing I like to point out is that the lend ratio of Korea remains low at around 10%, while Taiwan's lend ratio, some people say that it's a utilization ratio. It is total lendable, that is a total loan on balance divided by the total lendable assets. Taiwan's lend ratio is around 20%. So it means that if you buy in Taiwan, you get a very much more possible chance to lend your shares in Taiwan than in Korea. I asked why last week when I was attending to the PASLA conference, and one of the Asian lenders told me that because Korea's market, there are a lot of big shares like owned by the chaebols. So a lot of shares in supply, but demand is not that high. But it caused the denominator so big. So the lend ratio is lower in Korea than in Taiwan. And the reason why Taiwan can enjoy a very unique standing point in the Pan-Asian SBL market, I think, first of all, I think because our listed company are very robust and a lot of funding activities from these companies. And on top of that, our regulation doesn't prohibit those who subscribe, those who sell short the shares of the underlying securities to cover their short position from the subscription of the new shares. So there is a lot of opportunity to arbitrage in the issuing market and the trading market. So that makes our SBL market very active. And also, we provide a very flexible multi-layer trading facility for the users in the SBL market. Also, because Taiwan Stock Exchange, on the one hand, we act as a market infrastructure provider. On the other hand, we provide the SBL platform. So we can leverage our IT system to make our SBL market as transparent and as timely as possible. So on a daily basis, we can disclose our on-loan balance as well as the SBL short balance to the market, individual or institutional alike. Also, we have a quota for short selling, and we have an order book for our SBL system. We also disclose them on our website on a real-time basis. That may all together make our SBL market very, very attractive. Then Taiwan's practice. I mentioned that Taiwan provides a very flexible and multi-layer trading environment for the participants. There are two layers. One centralized, the other one over the counter. When you borrow and lend via the centralized Taiwan TWSE SBL system, you can have three alternatives. The fixed rate, and the other one being the competitive bidding. For these two, Taiwan, for the fixed rate and competitive bidding, Taiwan Stock Exchange stand in the middle of the lender and the borrower. We act as the central counterparty to guarantee the trades, while the lenders and borrowers also have the degree of freedom to negotiate their trades and report to us so that we can notify our CSD to transfer the underlying shares accordingly. But they need to assume the bilateral risk, the credit risk on their own. Also, the securities firm also can borrow and lend over the counter in their office. Before February 1st this year, the securities firms are only allowed to lend shares to their customers. But starting from February this year, the brokers are also allowed to borrow from their customers. So that makes the supply of the lendable assets much more bigger. That will bring in more liquidity in our market. That's a closer look of our market. The fixed rate competitive bidding, the Taiwan Stock Exchange acts as a guarantor, and we receive collateral from the borrowing side. And the collateral ratio is fixed at 140. And for the margin call, the maintenance ratio will be 120%. That is a bit higher comparing to the negotiated trades, around 105 or to 110%. So in the negotiated trades, the collateral ratio is a bit lower than the TWSE trades. And the fixed rate trades is fixed at annual rate at around 3.5%. And the competitive bidding, we decided the trade based on the price and time priority. And the price for negotiated trade self-evidently is negotiated between the counterparties. And we have also have a restriction for the shares you borrowed. The majority of the shares is for SBO short sale. It constitutes about 60% of the total on loan balance. The other use that you can use to return the borrowed security, or you can use them to manufacture the dividends for the corporate actions to the lenders. And you can also use the shares you borrowed to return the margin short sale position. And also you can use the borrowed shares for exercise of cash physical settled derivatives, and also for the in-kind creation and redemption of the ETF. Other major characteristics of our market is that we have a ceiling for the percentage of the SBO short sale. Together with the margin short sale and SBO short sale, it cannot go over 1/4, 25% of the total issued shares of underlying securities. And also, for the SBO short sale alone, the SBO short sale cannot exceed more than 10% of the issued shares. And on a daily basis, the daily maximum for SBO short sale cannot exceed the average, the 20% of the past 30 days trading volume. We call it 20-30 restriction. That is a major curse of our market because that limits the liquidity in our market as a whole. Hopefully we can make it, and that shows the TAIEX index price behavior over the past 4 years. Although there is a lot of volatility, but for the period, the TAIEX fundamentally remained unchanged. But for the SBO on loan balance, it almost tripled from 170 billion NT dollars to almost 500 billion NT dollars, almost tripled. And if we break down for the on loan balance, we can see the lighter part of the short, the chart. That is the SBO short sale. And for that part, it is the financing trade. It is about 20% of the market. And that is about 60%, averagely speaking. And the rest of them are the creation, redemption, and all the exercise. Also, we include in this part the buffer of the borrower. That means that when they are borrowed by the borrower, they still not them out. So they are kept in their CSD account. So that together constitute another 20% of the market. Because we have the IT technique, and we operate both the stock market and the SBO market, so we can closely monitor the daily trading activity of our market. And that, as long as the unload balance is concerned, that is the TWSE negotiated trade, and that's the brokers negotiate. That these are the trades that are done in brokers' place over the company, and that is the TWSE competitive bidding, because the overcharge of the initial collateral and the maintenance collateral, so it is not that competitive. Also, that put the local lenders who are only allowed to lend through TWSE competitive bidding in a disadvantaged status. That's as long as the SBO transaction value is concerned. That is the TWSE negotiated trade. That's the broker. That is the purple part is the broker's transaction, and the middle, the green part is the TWSE competitive bidding. That's SBO short selling for this, and the foreign institutional investors total sale. That's the total turnover of our market. Averagely speaking, the SBO short sale is around 3% to 4% of the total market turnover. But the historical high happened last year. It almost reached as high as 6%. And that's the participants. The borrowers are majorly the prime brokers, which are international renowned like Morgan Stanley, Credit Suisse, and the major lenders. Likewise, is the foreign institutional investors like you. So the majority, like 80%, as high as 80%, are the foreign institutional investors that can enhance their investment yield by lending their shares to the borrowers who need them. So for the goal to harmonize our SBO practice into the international standard, we have been kept on improving our SBO trading environment. For example, in 2015, last year, we allow more currencies to be accepted as cash collateral in our competitive bidding system, as well as the broker's system. We used to only allow US dollars, and nowadays we allow the British pounds, the Euro dollars, the Hong Kong dollars, Australian dollars, and also Japanese yen to be accepted as the eligible cash collateral. On top of that, the brokers are allowed to negotiate the collateral ratio with the borrowers. It used to be set at 140, but nowadays they can negotiate. That makes our local brokers much more competitive than before. And also starting from this year on February, as I just mentioned, that the SBO brokers are allowed to borrow shares from their customers On top of that, we also fine-tuning some details of our system, like we enlarge brokers' systems eligible securities. It used to be packed with margin with securities which are eligible for margin transaction, but we enlarge them to any shares that an arbitrage opportunity exists. So, for example, if the underlying company issues ADR or issued convertible bonds, or it became the underlying securities for futures stock options, then although they are not the underlying security for margin trading, they are allowed to be lent or borrowed from our system and the broker's system. And also, we cancel the client's borrowing minute for the broker's system. And we also extend the rollover limit from once to twice. That means that the longest possible term will be 18 months for an SBO trade in total. And still, we have a lot of projects going on in the pipeline so that we can enhance our system furthermore. And among them, I would like to point out is the collateral ratio for our competitive bidding. We hopefully to lower them at least to 120 so that the local lenders will not be disadvantaged. Also, we have been trying very hard to talk with our regulators. Hopefully, we can persuade them so that the very liquid SBO market will become realized in our market by removing the daily short sale quota for SBO. To consummate my presentation, I would like to give you some of the fundamentals of our Taiwan stock market. Basically, when you look at Taiwan's stock market, TWSE market, specifically, we see a very diversified listed companies. We have more than 50% comes from IT industry. And also we have some very competitive companies from the traditional industries. For example, the textile company, which used to be the sunset industry, but they renovate themselves. They do